Okay, let's move on to lesson 3 about how to trade futures and Forex and talk a little bit about money management. The first thing I would do if I were starting out fresh is I would develop a business plan to find out if this is going to make you enough money, if it's going to be profitable enough for you to actually make a living at this. So one thing you need to do is figure out what your revenue is going to be from your trading profits. If you haven't done this already, just put down your gross revenue from your account statements. Second thing, you need to subtract all of your trading expenses. These include equivalent of your office rent, your power bill, your data feeds, your internet connection, your computers, all the seminars you take, all the time you put into this. Second thing is subtract what your income should be. That'll give you a gross profit. I mean, you want to pay yourself as you're developing this trading business. You've got to subtract your taxes. There are some great tax benefits if you qualify as a trader. You've got to read the IRS situation carefully, and that'll give you a net profit, and you need to compare that, some of you want to do this full time, with what you're making at your current business or profession. Now the second thing is you've got to develop a trading plan. And this is different than your business plan. You've got to figure out which market to trade. In my opinion, you want to pick one only. You might want to trade Forex only and pick a couple of major pairs to trade, preferably probably the Euro-US dollar pair. Secondly, you want to figure out how many contracts you can comfortably trade and handle with respect to the risk, and we'll talk a lot about that a little later. You've got to figure out which days to trade if you're doing this part-time or in the morning or, before or after work. You've also got to figure out which hours you're going to trade. Now, our system a lot of time teaches people you can trade as much as you want in 90 minutes and be done every day. You don't have to sit there and look at the market all day long. You want to figure out what the minimum or maximum number of trades you're going to trade a day and when you're going to stop trading based on profit or on losses. If you don't do this, you will not have a solid way to correct and work with your trading business. Now, the other thing we talk about is minimizing risk. What research are you going to do and where you're going to get the information from. If you're trading the E-mini, I recommend you as a minimum take a look at Bloomberg in the morning. And if you're trading Forex, you want to look at Forex Factory. There are a lot of other sources of data, but you've got to get an input into figuring out what's going on. Otherwise, you're playing in the freeway and not paying attention to things. And if you're asleep at the switch, the market is going to cream you. You want to figure out from how large your account you're going to have to figure out how large an account to get and what maximum risk you're going to take on each page. Van K. Tharp has an interesting trading game that you might want to get at his site iitm.com and get that game and learn how to accept the maximum amount of risk you want to trade. You want to have backup systems in place, extra power supplies, phone systems, your broker's number right there in case you lose power. You want to have all the backup systems. You want to have a disaster plan in place, like that big hit we took just recently in 2010 that was caused by stop trading of one market and the other markets kept going, and basically the prices went to zero. You want to have a mental pre-flight plan. You want to sit down and do a routine, just like a golfer that gets up and does every single thing, getting him ready to hit the shot, and they do it over and over and over. Pilot does the same thing. And finally, you have to understand that stops don't work in a fast market. And you've got to really internalize that you can get stuck if you're not careful. Now, the other thing I encourage all my traders to do is learn what their expectancy formula is. An easier way to say this is, what is your batting average? What's the probability that you're going to win on the trades and the signals you're using? And the first formula here is a probability of a win times the average win minus the probability of a loss times an average loss. Let's make it very simple. We're going to flip a coin 100 times in a row, and the probabilities are 50-50. And let's say you're going to make 2 points on every head and lose a point on every tail. I ask people if they would play that game, and I will tell you that about 70% of them say no. And that's a misunderstanding of what you're doing when you're trading. Even if you get 10 tails in a row, you're only down $10, and you get 5 heads, you're back to break even. So one of the very important things is to understand this formula. And basically the rest of the examples are, a high probability win, an average win down at the bottom, and an average losing game. You can still make money if you minimize the losses on each trade. I won't go into that in much more detail. We cover a lot of that in our other information sources. The expectancy formula comes from practice, 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 and we usually want people to get to a 60% winning trade or batting average with a 2-to-1 win to loss. That will make sure that you basically make money. And a lot of people, when they practice with a sim broker or do anything, they get to that fairly quickly. As soon as they put real money on the line, they start losing. So we're going to cover some of that in the mental aspects of trading, but it is important to know that once you add the emotion, which is the most important part of trading, controlling that you're going to have a different average when you trade with real money. Now, the biggest thing I tell people to do is get into a 2-to-1 bracket trading system. And the bracket trading system is an automated system that sets up a limit to get you out when you make 2 points or more, and a stop to get you out when you're down a point. Now, it's not necessarily 1 or 2 points. It may be a 4-point win and a 2-point loss, but that ratio is very important. There are a lot of trading programs out there that are 1 to 2, which means you have to win 70% of the time just to break even. There are also programs out there that are 1-to-1, and it depends on how good a trader you are that the size of the bracket needs to be set. So you get your expectancy ratio. Okay, that's your batting average. And the other thing you want to do is keep a trading log. I can't tell you how many people call me up and want help with their trading, but none of them ever keep a log. What you've got to do is keep a before, during, and after picture of the trade, or as a minimum a picture overall, and record your emotions when you start. I've done complete seminars on the difference between live trading and sim broker trading, and you want to treat those two exactly the same and keep track of your wins and losses on both of them. But before, you're probably anxious, you may be greedy, you may be scared, you may get in early, you may get in late. You've got to keep track of what you did, why you did it, and how you felt. Now, during the trade, you probably get more nervous. I tell people that my blood pressure used to go from 500 over 300 when I was starting, and now it's down to 5 over 3. I mean, it really becomes better with practice. During, you get really jumpy, and a lot of times you get fearful and get out too early. Now, finally, most of you probably relate to this. After you get out, there's a big sigh of relief. It's over. I either took a loss or I took a win. But what happens if you miss a signal and you didn't get in and you get a winner or you get a loser? You've got to think about how all those things affect your trading and your psyche. And we'll spend a lot of time in that in the last 2 sessions. Now, the bracket trading looks like this. This is a depth of the market chart. On the left green side, you can see the number of people waiting to take a trade with a stop in or a limit in, a stop buy or a limit buy. And then the red side of the get out. Now, this is from 880 to 876, so it's about a 4-point range. And there are about 15 to 20,000 traders waiting to make a trade. And the little 1 in the middle tells you that that's the last trade. And that went off at 878 and a quarter. If you look down at the bottom, down here, get my cursor down here, you can see we're looking for a 3-point win and a 1.5-point loss. And on the other side, with the sell, a 1.5-point stop and a 3-point limit win. Now that's a 2-to-1 ratio. Once you punch the button up here to just order buy at the market, sell at the market, those brackets are set automatically for you. It relieves a lot of the stress. The thing that people don't really understand is that, let's say you take a loser on the start and you lose 1.5. Second trade, you have a winner and you win 3 points, so now you're plus 1.5. Finally, you take a loser and you lose 1.5. Guess what? You've broken even, and you've only had to be correct to break even 1 out of 3 times. You've got to internalize this concept, because that is probably the most important thing that I can teach you, is understanding this expectancy formula and using bracket trading. Later on, you'll probably start doing it mentally and using the brackets mentally, but it's very important you understand this concept. So what we'll cover next is advanced money management, when to trade, how to trade it, what the odds say, and learn how your system works. And once you believe that, you're 99% of the way toward trading success.